There are 5 principles that will make anyone profitable, and it doesn't matter if you are struggling right now, you just started, or you already got a few payouts. These 5 principles are what allowed me to go from 3 years where I was struggling and unprofitable to now having made over $1 million from the financial markets, received over 223 payouts, and I'm able to travel when I want and provide the life for my family that they always deserve. So let me show you the 5 simple principles so you can apply them right after watching this video. Starting off with number 1. Now the first principle is extremely important because this is going to start simplifying your journey. Because I want you to focus on one thing, right? Because everyone tells you, oh, risk management, oh, strategy, oh, psychology, oh, this, everything is what matters. And so you get overrun with information and you don't know what to focus on. And so principle number 1 is that it's strategy over everything. Don't worry about trading psychology. Don't worry even about risk management. Obviously, don't risk more than 1%. That's a very, very simple way of keeping risk management. But what you're going to do afterwards is you're only going to focus on strategy until you have that down. Because if you have a profitable strategy, by only risking 1% and not having to worry about the trading psychology side and everything, it will simplify things to you. Because you might be thinking, oh, right now my struggle is trading psychology. Very likely it's your strategy, right? It's a fact that you don't understand maybe why you're following a specific checklist, and that is making you unconfident, and therefore if you're entering a losing streak, you stop executing on trades. And so I want you to focus on strategy, and your strategy needs 3 core things, and that is direction, higher time frame key levels. So direction, you're going to have it on the daily and on the 4-hour. Higher time frame key levels, you're going to have it on the 1 hour and on the 15-minute. And every single day, your strategy needs to give you a way for you to identify these: the direction, the higher time frame key levels, and number 3 is the targets, because eventually the market is going to stop. And focus on that solely until you have something that you're confident in, right? If you want, I dive way deeper into this on a masterclass that it's the first link in the description. If you want to check out exactly more about direction and what steps to follow in order to reach trading profitability, and that masterclass is linked in the description. So principle number 1 is always going to be strategy over everything, strategy over everything, strategy over everything. Number 2, never overlook direction. Direction is the most important concept in trading. If you don't understand the direction of the market, then you don't know how to trade. Now, your strategy needs to tell you how to come up with that direction. For me, a daily and 4-hour chart. But direction is not only about daily and 4-hour chart. It goes deeper into seeing how the 1 hour is behaving and how you can execute on it. Because as traders, instead of having a checklist, you should understand why you're executing on that checklist. The checklist should be a side effect of you understanding why you're executing. So never overlook direction. Because let me tell you, a lot of traders tell me, yeah, Kimmel, direction, blah, blah, blah. But you come into the day neutral, and coming into the day neutral is never going to help you, because it's like opening Pandora's box, or I leave you in the middle of the ocean and I'm like, come on, do your thing. No, direction is about setting boundaries for you and your trading every single day. Because if you do that, you're not going to have long shorts, and you're going to be flip-flopping, and then the market ranges and you're absolutely cooked, right? You want one day, one direction. The maximum that can happen is one day neutral, but very specific things for you to turn bullish or bearish. And you should never, ever overlook direction on the daily, on the 4-hour, and on the 1 hour. These are the most important time frames for you to master the direction in. Now, before going on to point number 3, I do want to mention that you need to master prop firms. We're going to talk about that in point number 5, which is incredibly important, which is about making money with trading. And one of the best ways is with prop firms. And the best prop firm right now that has CFDs or futures, no matter which one you prefer, is going to be FundedNix. They have very clear-cut rules on futures. If you want a consistency rule on the challenge, you go for the legacy challenge. If you want a consistency rule on the funded, you go for the rapid challenge, right? And so with that, let's get into point number 3. Point number 3 is never ever trade without forecasting first. And let me explain. You might disagree with this, but let me explain. Every single time you are looking at the chart after the session open and you say, oh, Kimmel, I think the market is going bullish. and then the market starts really, really going down. Then what's your reaction? It's like, oh my god, okay, it's going down. I wasn't expecting this. Okay, maybe I can execute on the shorts. Okay, there's a fair value gap. Okay, let me execute. And you take a loss. And then you say it's trading psychology. Because every single trader blames psychology. And that is always the wrong way. Because psychology is usually just a side effect of something you didn't do before. Such as not understanding the plan. Not understanding why you're executing. It's just, oh, this person told me that it works. So if I see it, I'm just gonna make it work. You are never going to be confident with that strategy. So therefore, as soon as you take 1-2 losing trades, you'll get emotional and then you blame trading psychology. But the problem was the foundation of not understanding why you're taking these trades or not having the processes in place to actually execute consistently on this plan. And that's why forecasting is so stupidly important, because that's when you are able to look at the charts before your session and think, if the market does this, I execute. The market is bullish. I see my key levels. I want the market to manipulate to it. I want the market to give me a 5-minute or 15-minute market structure shift, and I want to execute towards the target. And that's going to give me a 1 to 1.5, 1 to 2 at least. When you forecast, it's going to be as unemotional as it gets. Always. And I want to give you an example of that. Right now, I have here a 100 euro bill. And let's say that this is heads, and let's say that this is tails. I'm sorry, I don't have a coin. I'm going to be honest. Now, no matter what I do, so heads or tails, guys, right? Heads. Okay, tails. So, here's the thing. Right now, you saw this, and you're like, oh, okay, I don't really care. But now let's say we put money on the line. It's like, okay, if you don't get this right, you need to subscribe. If you don't get this right and you're not subscribed, you have to subscribe, right? And you have to send me 5 million euros. So now, obviously, this is not real money, but let's say heads or tails, right? I want you to say whatever it was. Okay? Boom. Tails. I want you to now write in the comments if you had it right or wrong. But the truth is that as soon as you have money involved, you've probably had this with friends and etc. That's where emotions get in the way. And when you're forecasting, that's when you have nothing to prove to the market. Nothing. When you put a trade, that's when everything matters. When you see the market doing something that you didn't forecast, that's when it matters. Right? Because your ego is now on the line. You said that this was going here and it's going there. And you should have known better. And this is where everything gets tangled and every single trader starts losing. So I want you to forecast every single day. Now, point number 4 is going to be very simple: risk management. This is about the risk management that is required for you to become profitable over the long term and that you are able to make money from prop firms, right? This is what I use with all of the prop firm accounts that I have. I'm max allocated with FundedNext. If you want to check it out with code Kimmel, you'll always get the best discount code. And so with prop firms, one very simple rule: never trade more than 30% of the accounts that you have. I don't care if you have 2 100K accounts and you think, oh, Kimmel, I can make $2,000 per trade instead of $1,000 per trade. Still, only trade one account. Because if you're watching this, you've probably already blown a funded account. And how bad did it feel? Probably quite bad. And so therefore, I want you to avoid that emotional roller coaster of, I have 3 accounts, I have 0. I have 3 accounts, I have 0. I have 3 accounts, I have 0. I want you to avoid that as much as possible. And so therefore, never trade more than 30% of your accounts in order to use proper risk management on funded accounts. And point number 2, and this is incredibly important, is you never take more than 2 trades per day. Now, I can talk about risk management, and what I would recommend you doing is never have more than 5% risk exposure every single week. What does that mean? Well, if you enter in 5 trades per week, you don't want to enter with more than 1% risk. If you enter in 10 trades per week, you don't want to enter with more than 0.5% risk. And you pair that with not taking more than 2 trades per day. No more than 5% risk exposure every single week, and don't trade more than 30% of your accounts, maximum 2 trades per day. And principle number 5, this one was hard for me to learn, which is, it's always going to be a money in, money out game. What does that mean? With prop firms, the game has changed. This is not like personal capital, this is prop firms. And it's about the amount of money that you're spending on challenges versus how much money you can get out once you are funded, right? So for example, you definitely want to aim for that at least 10x before you start really scaling up to incredible numbers and waiting for that massive payout. You want to make sure that you have 10 times more payouts than the amount of money that you've put in until you start actually risking heavy, right? And then one of the things that I always want to mention in these videos is that every single payout is worth it, right? I don't care if you just received a $5,000 payout, $2,000 payout, $1,500, whatever it is, it matters. Because, and I always want to be grounded when I'm making these videos, because what might seem like a lot to you might not seem like a lot to me, or what might seem like a lot to me might be a lot to you, because I know some of you guys are balling. But this to say that you need to take your profits. You need to lock in those payouts. Even if you have to wait 5 days until your payout date, I would rather you wait and actually get paid than risk more. And yes, you can get a bigger payout, but you can also blow it. And the reason as to why you started trading is because you wanted to make money. And now you are able to, you have money on the table. If you just wait 3 days, you can take it. And you don't, you're missing the point. You're missing the reason as to why you started trading in the first place. Yes, it might have been because, oh, I'm gonna get rich and I'm gonna build the schools and I'm gonna build the hospitals. All of that requires money, right? Trading is a zero-sum game. There's nothing noble in trading. There's something noble with the money you can make from trading, yes, but besides that, take your money. Because money is the reason you started. And don't neglect a smaller payout. It really doesn't matter. One of my first payouts was a little bit above $100. And you know what I did? I spent it all on a dinner with my family, right? So with that being said, I don't want you to be neglecting any payout, any money that you have on the table. Take it, especially with prop firms. And the last thing that I want to say in terms of the money in, money out is that in order to master it, you need to learn from someone that has been there, done it. Every single week, I jump on a call and I'm answering questions from everyone inside of Funded Trading Blueprint. And yes, they paid me to be there, but guess what? That's why they were able to get funded and start getting payouts, right? We had Topman Terry that within 1 month had a $6,000 payout. Within 3 months, he had over $10,000 in payouts. Trading is just like any other sport where you pay for the coach, where you pay for the gym membership. Well, like, do you really think that all of these professional football players became professional without ever paying a penny? No, they are probably the ones that are spending the most on their health, on their coaching, on their training, on everything, right? And I still do the same. To this day, the last time I bought something huge was a $20,000 course, right? $20,000. Now, obviously, it was worth it, because else I wouldn't be here telling you. Just kidding. But this to say, don't think that trading is just going to be something that happens like that with no investment. You want to make $100,000, $1 million, whatever you want to make. You don't want to put any money in. That's not going to work with prop firms. It's not going to work with education. That's not going to work with trading in general. You buy it nice or you buy it twice. I've had bad vacuum cleaners, and then I bought my Dyson. And I bought everyone from my family a Dyson. I was like, buddy, this is the thing. So with that, just understand, buy it nice, buy it twice. Check the first link in the description to get the access to the masterclass that I recorded a little bit earlier on. If you want to check out Funded Next, you can check out with this video right here. If you want to check out my way to scale to $10,000 per month, you can check out this video right here. I'll see you in the next one. Peace.